Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 15th, 2025, and we're diving into the third quarter earnings report of Creative Media and Community Trust, a company focused on real estate and community investments. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Creative Media and Community Trust has been making strategic moves in the real estate sector, and their latest earnings report provides some interesting insights into their performance and future direction.
Financial performance overview. Let's start with the financial performance. Creative Media and Community Trust reported a net loss of $17.7 million, or $23.52 per diluted share. John, what are the key factors contributing to this loss?
The net loss was primarily driven by a decrease in redeemable preferred stock redemptions and dividends, which was partially offset by increased interest and depreciation expenses. Despite the loss, the company managed to reduce its FFO and core FFO losses compared to the previous year, indicating some operational improvements.
That's interesting. How does this compare to their performance last year?
Compared to the same period last year, the net loss has decreased significantly from $34.8 million. This improvement is largely due to strategic refinancing and asset sales, which have helped stabilize their financial position.
Real estate portfolio and strategic initiatives. Moving on to their real estate portfolio, the company reported that their office portfolio is 73.6% leased. They also executed over 80,000 square feet of leases. Can you elaborate on these developments?
Absolutely. The increase in leasing activity is a positive sign, showing a recovery in demand for office spaces. Additionally, the refinancing of an $81 million mortgage and the agreement to sell their lending business for $44 million are strategic moves to strengthen their balance sheet and focus on core assets.
How do these actions align with their long-term strategy?
These actions are part of their plan to pivot towards premier multifamily assets and improve liquidity. By selling non-core assets and refinancing existing debt, they are positioning themselves for sustainable growth in the multifamily sector.
Segment performance and challenges. Let's discuss the performance across different segments. The office segment reported NOI of $5 million, while the hotel and multifamily segments reported $850,000 and $792,000, respectively. What challenges are they facing in these areas?
The office segment faced challenges due to decreased rental revenues and increased operating expenses, particularly in Los Angeles and San Francisco. The hotel segment was impacted by ongoing renovations, which affected food and beverage sales. However, the multifamily segment showed resilience with a slight increase in NOI, driven by cost savings in real estate taxes.
And what about their lending segment?
The lending segment saw a decline in NOI due to lower interest income from loan payoffs and reduced interest rates. However, the planned sale of this segment should help them focus on their core real estate operations.
Management commentary and future outlook. Finally, let's touch on the management's commentary and future outlook. CEO David Thompson mentioned a focus on multifamily assets and ongoing asset sales. What can we expect moving forward?
CEO David Thompson emphasized their strategy to enhance liquidity and focus on high-quality multifamily assets. The company is actively evaluating additional asset sales and has seen a 69% increase in leasing activity, which is promising. The near completion of hotel renovations also sets them up well for future growth.
It sounds like they have a clear path forward. Any final thoughts on their outlook?
While challenges remain, particularly in the office and lending segments, their strategic focus on multifamily assets and liquidity improvement is a positive step. Investors should watch how these initiatives unfold in the coming quarters.
Key takeaways. In summary, Creative Media and Community Trust reported a challenging quarter with a net loss of $17.7 million. However, their strategic initiatives, including asset sales and refinancing, indicate a focus on strengthening their financial position. Key takeaways include a net loss of $17.7 million, an adjusted EPS of $23.52, a 73.6% leased office portfolio, and a $44 million asset sale agreement. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Creative Media and Community Trust's performance and future prospects.
Thank you to our viewers for watching. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Creative Media and Community Trust performance in the comments below. Until next time.